What's up guys, it's Chris here. So here's a question. What exactly is our prime objective as investors? Some people might say it's to make money, and I guess I can't really argue with that. But then the next question is, how do we make that money? Which of course is to invest in the best investments possible. So perhaps the one question we all constantly need to ask ourselves as investors, time after time, is what is the best place to invest our money? And that is what we're going to try and answer today in this video, as we ask the experts of that very question to see what are the best local JSE stocks to invest in for this year in 2023. So if you want to know the answer like I do, then stay tuned and let's get started. So when I started this channel, it was because I went looking for investing clubs and couldn't find any. I wanted to share my experiences and learn from other people's as well. So in these videos, I share my experiences, and in the comments, you share yours with me. And I often find great advice and suggestions in them, including the idea for today's video. As you can see, it was a great suggestion, which was to show the top 5 stock picks from the local JSE market, because not everyone can or will invest in some of the offshore stocks we mentioned in our first video a little while back. So first, I want to say thank you guys for the suggestions, keep them coming, and with that, let's get right into the video. So in my searches to find the best stocks for us to invest in for this year, I looked through many articles and industry insider opinions from many different journalists, and eventually I came upon what I think to be 5 credible investment experts who have picked their favorite stocks for 2023 based on a number of factors. And it is those 5 that we are going to go through right now. However, it's good to remember that at times even the experts get it wrong or don't get it as right as they thought they would. So even with these picks, make sure that you do your own research and that any investment you make suits your own personal investment goals and risk appetite. But with that said, let's get straight into number 5. So here at number 5, we are hearing from Mr. Mark du Toit, who is from Oyster Catcher Investments, and the stock that he picked for 2023 is Standard Bank. As you know, Standard Bank is a major SA bank and financial services group, and it's South Africa's biggest lender by assets. Du Toit said that Standard Bank offers good value in 2023 as it now fully owns Liberty, that allows the group to reorganize its capital and have more capital to inject into the business. He says the bank also has a lot of space for cost optimization, as the market had seen with Nedbank. Now, over the past year, Standard Bank showed returns of around 15%, outperforming both the industry average of 2% and the SA market of -5%. He claims potential investors can expect a continued return of around 15% from Standard Bank over the next few years, and that we can expect dividends of around 7 to 8%. If you've been on the channel, you will know that we own Standard Bank, and it has outperformed all our other banks over the last year with a current 13% gain and around 8% dividends. Then in place number 4, and keep in mind these aren't ranked in any order, we have Ashley Daswa from Sanlam Investments, and he picked OUTsurance. Now keep in mind we're talking about OUTsurance Group, known for its financial services, especially its insurance products, where you always get something out. Daswa said the group looks promising with a strong management team that recently executed the company's transition and rebrand from Rand Merchant Investment Holdings, or RMI, and that OUTsurance also has enough cash to cover all of its debts, and that makes its financial situation very stable. The group's price to earnings ratio is close to its 10-year low of 2.35, which is incredibly low, and remember, low shows good value in stock price, and that its stock dividend yield is close to a 1-year high at 2.4%. Okay, next up in the 3rd spot, we have Jonathan Fisher from PSG Wealth Santon Grayston, who chose MTN. MTN is a South African multinational mobile telecommunications company that operates in many African countries and holds a 37% market share in South Africa. He notes that the group's revenue has grown by 152% over the past year, with an earnings forecast of around 16.5% per year in the near term. Based on its latest financials, Fisher believes that the business is showing resilience in a dampened economy with a turnover growth forecast in the mid-teens, and he added that MTN is also looking to drive its return on equity up to around 25% in 2023, which is huge. Fisher believes MTN is performing exceptionally well, noting that expectations of an increase in headline earnings of 30% for the full year's financials are still underplaying it. MTN is currently trading at around 144 Rand, and some estimate this to be 58% below its fair value, with Fisher adding that PSG currently values the share at around 218 Rand. The group also indicated a dividend of at least 3.30 Rand a share, which he says makes it a very attractive buy. Then in our 2nd spot today, we have Rowan Williams from Nitrogen Fund Managers, who chose Supergroup. So if you don't know them, Super Group provides logistics and supply chain management services throughout South Africa. The group provides truck rental, third-party distribution services, cross-border transport, freight management and trading operations, with a big portion of its operations in Australia. Williams believes that Super Group offers a great opportunity for buyers as the rand has weakened, making the group quite defensive in its earnings, and he added that its latest financials are also in good standing, with earnings up over 30% the past year. Super Group is currently trading at around 35 Rand and has increased year to date by 32%, outperforming the All Share and the top 40 indices, and is paying a 1.7% dividend currently. And lastly, in the number one spot for today, we have Jacobus Brink from Novara with his selection of Anglo-American, who we know as the British-listed multinational mining company and the world's largest producer of platinum, accounting for about 40% of the world's stocks, and is a major producer of diamonds, copper, nickel, iron ore, and steel-making coal. The company showed a solid performance in its latest financials, and Brink noted that it's well diversified, with operating margins expanding, which is a really good sign. Anglo-American is currently trading at 702 Rand per share, which is close to 15% below its historical high, with a forward PE ratio of just over 9 times. Brink believes the company is a really good buy from February 2023, and the company is currently paying a forward dividend of 4.3%. And guys, there you have it. That is it for the video today, where we take a look at 5 investment experts and go through their picks for the top investments to buy in 2023 and why they think they are good choices to make some great profits. We will also be tracking these investments here on Casual Cash until the end of the year to see exactly how well these investments do. So if you want to see that, or if you find this kind of information helpful, please feel free to like the video and subscribe to the channel if you haven't already. And we'll see you next time, as always, on Casual Cash. Cheers.